My special guest this morning is a lecturer of banking and finance law at Queen Mary University of London. His new book, The Speculator of Financial Markets, How Financial Innovation and Supervision Met the Modern World, can be accessed on the link that I'm going to paste right in the description panel on the upload for this video. This episode was proudly brought to you by Global South Opportunities. If you're looking for a scholarship, if you're looking for a job, if you're looking for a fellowship or a research grant, please do not forget to hit the link that is in the description panel on the upload for this video. Global South Opportunities is there to support you all the way, to provide you with all the information that you need and the expertise you need from trained professionals that are with the organization. Enjoy the show. Dr. Daniele, thank you very much for making the time. I'm happy to have you today.
Thanks for having me.
That's wonderful. I've been reading your CV. I was reading it a couple of weeks ago before sending you the invitation to come. And I've seen you've done like phenomenally great work with research and banking law, financial institutions, stock markets and stuff. So could you just briefly describe to us and to describe to our audience who is Dr. Daniele, what is the work that you're doing, and what are you currently teaching?
I am a lecturer in banking and finance law at Queen Mary University of London, where I teach international financial regulation, regulation of financial markets, and investment banking law. I also specialized in some way in relation to corporate finance law and mergers and acquisitions that are more on the transactional side of the deals. My main specialization, and how probably I became famous, especially also in the US, is because of my research as a pioneer legal studies on special purpose acquisition companies that are very important investment vehicles. They became famous between 2020 and 2022. But then, of course, in the US, being this an American innovation was already there in place in the US since the 1970s. And recently, they became more popular. So that is one of the main specialization, and also where the books that I wrote for the first time on special purpose acquisition companies, they were endorsed by Nobel laureates.
Interesting. So I've seen that you qualified to practice law in Italy, if I'm not mistaken.
Yes.
And now you're in the academy. You are now a lecturer. Can you just briefly tell me that transition? Did you know that you want to get into the academy? What do you enjoy more? Is it the practice of law or the academy?
I think I enjoy both. So essentially, my start in law was through practice. And also, I practiced law in Italy, but also in the UK when I was in London. And then in London, I started to study a LLM program at Queen Mary University of London at the Center for Commercial Law Studies. And just 6 months after, really by chance, I won a scholarship at Birkbeck College, University of London, in order to undertake research on special purpose acquisition companies. That was in 2014. So in reality, by that time, they were not so popular. But that then became actually the first PhD in the world in law related to the topic. So I think even my journey in academia had a little bit of luck in some way. I was not thinking maybe at the start of my professional life to become an academic. Then happened by chance, as everything in life. And then I started to enjoy and to love the work, and especially to share knowledge with people, with students, to build up students, their careers, their life. And that, I think, is what also what is important for me, I mean, in my job, daily job in academia. Something that sometimes I could not see in my professional life, that was lawyer, maybe that is more business oriented. And now actually I'm able to combine both sides, because I always believe that also for a student perspective, it's important to have someone that has practiced law, and sometimes still today I advise companies or I write legal opinion for the High Court in London, the Commercial Law Court. So essentially, it's important to have this dual side within your life, legal life.
Wonderful, wonderful. I want to give you the time to give a breakdown of what you consider to be the core ideas of the book and its central argument. But first and foremost, I want to understand, if you can explain it in terms that we can understand. Why did you write this book?
Very good question. So essentially, my first idea to write this book is connected to special purpose acquisition companies, because as I said, they became very popular in 2020, just at the start of pandemic. Since then, they started to raise billions on capital markets in the US, and even to outperform the traditional IPO, initial public offering market. So that was for sure an experience where I started to see that speculators and speculation is on the rise, and also the risk that speculation can in some way bring to financial markets. For this reason, I started to be more interested on the role of the speculator, and I started to be more interested to understand whether this concept, was always there in financial markets, when we can see maybe the first speculator in the market, and whether also, especially if speculation is connected to financial innovation, and if financial innovation can benefit markets or not.
That's wonderful. That's wonderful. So now, what are the ideas of the book?
So the main ideas of the book are based on an historical account. So this is a book about financial history, where you can also find many other approaches. So within the book, I also analyze especially the concept of risk and uncertainty. To analyze the concept of risk and uncertainty, I do this from a sociological point of view, philosophical point of view, but also economic point of view. So I think that the audience will find useful the remarks, and especially will find many sources of inspiration. So this is a book that essentially, also is written in a language that is very simple, very direct with the public. So everyone, even if not expert in law, for example, can read the book, understand the book, and can have a real understanding of how this figure or symbol of the speculator, financier, has developed financial markets, and how financial markets sometimes, especially in times of crisis, in times of panic and crashes, this has brought essentially on the table then new regulation from the lawmaker and from the financial regulator. So the main idea of the book is centered essentially, in studying the developing of the figure of the speculator, and how speculation can benefit the markets or not, and whether also the law can help in shaping financial markets or not.
That's interesting. So now, looking at the conventional discourse on financial markets, right before you wrote your particular book, what contribution do you think the book makes to that conventional literature?
Yes, the conventional thinking, and I think even the common wisdom, is that financial innovations are dangerous. So, for example, we can see also with the rise, especially with stable coins, cryptocurrencies, decentralized finance, centralized finance, artificial intelligence. So essentially, all these new concepts that are very modern today, they might constitute a financial innovation. They are surely a financial innovation, but at the same time, we are a little bit scared of financial innovations. So this is something that for sure is still with us, but was also present in the past. Because in the past, for example, if we think even about the prohibition of interest, that essentially parties, contractual parties, they could not charge interest, so money, they could not produce money. And this was a prohibition that actually then created a need within financial players, maybe to propose new financial innovations like the bill of exchange, or like the commanda, or like other alternative instruments. So this focus, I mean, I think is always there and will always be there. Then the other point is how regulators will approach this problem, because if we have too much regulation, we might kill the market and financial innovations. If we have a middle approach, maybe it's the right one, but it's difficult to be implemented. And if we have an approach that is to ban financial innovation, ultimately or eventually, we will suppress creativity and competition in the market. So at the end of the day, we will not progress in society.
Interesting. So now, based on your understanding of your research findings for this particular book, are the people that are, speculating on financial markets, would you say, are they angels, are they devils?
Yes, this is also a very good question. Essentially, in the book, I start in the first pages to associate speculators to the symbol of Lucifer. So essentially, Lucifer was cast down on the earth because he was an angel of God, but essentially he wanted to be even superior of God. And so this idea of rebellion was an idea that was always with us, even in the story of human beings. So essentially, the book is showing that since even especially the rise of Protestant religion in contraposition to the Christianity and Christian dogma, essentially the man started to become more independent and started to take risk. So this risk, essentially, that was taken, then has developed in time and is something that has given the possibility to human beings and society to develop in society. And so to even take risk in order to achieve a profit. This is something that I also explain in the central chapter of the book when I speak about risk and uncertainty. And I connect this, for example, with Frank Knight in the Chicago School of Economics, for example, and even the other figure that is Keynes. So essentially, we can see that in financial markets it's very difficult to understand whether we can evaluate in a fair way the value of a financial asset, because the majority of time will be mispriced. And this mispriced of risk has created a lot of financial crises in our system. But these financial crises in reality are a product of human beings. And so human beings in some way, I mean, they will never be angels, so we will never be like God in some way, but we have a choice to be. So in reality, we have a choice in reality to have, at least in a secular definition, to make the right choice, something that many times in financial markets did not happen. So that is the main idea of the book, that at the end of the day, all those speculators, and so even people that were, included in the collapse of Lehman Brothers, or maybe the mismanagement of risk of Silicon Valley Bank, they are victims of the markets rather than being necessarily the dodgy persons that they activated perverse mechanisms. Those perverse mechanisms in reality are within our markets, are within centuries and centuries of ideas that essentially, they progressed in the history of humanity. For example, if we think about even measuring risk was not obvious, but then with the laws of probabilities, we could start to do it. Then after that period, essentially we developed other theories like portfolio theories, diversification of risk. We developed the concept of insurance. So in reality, we developed a lot of techniques also to mitigate risk. And this can be seen also today if we think about capital requirements, liquidity requirements. The only point for banks, of course, the only point that I can see is that if you have a look what happened now recently in March 2023 in the US with Silicon Valley Bank, when there was a potential mismanagement of interest rate risk, the main objection today from the regulator is to rise maybe the capital regulation for big banks. I don't think that this is necessarily the right answer, because essentially if we have a look even from a financial history point of view, whether we put more regulation in place does not necessarily prevent a human being to take risk. And so in reality, there is one aspect of risk that is subjective, and so is within the desire, the belief, the operational risk that cannot be anticipated, cannot be prevented. Possibly even the book is showing that every kind of measure, like even the portfolio theories and every other theorist in economics that tries to measure risk, cannot have 100% accuracy. So at the end of the day, we need to understand how to live with uncertainty. Uncertainty, I believe, is like, especially, Frank Knight said in Chicago School of Economics, so essentially, there is not a right measure. It's not possible to measure uncertainty. But uncertainty is very well connected to profit. So if we don't face uncertainty, we cannot have profit in our society and capitalist vision of the world. And so in some way, in the book also, I criticize maybe the idea to have a zero COVID world. It's impossible. It's something that is utopic. So at the end, if we follow policies that are zero COVID, for example, policy, or maybe zero car accident policies, it means that maybe we need to prohibit all the people to drive a car. This is true that will reduce the risk at even zero, but it's also true that will not allow us to live. And the same thing is in financial markets. If we have a zero risk and we don't face uncertainty, we will never have progress and we will never make profit. So that is why I don't believe that necessarily the speculator is the devil. The speculator actually can be the innovator, can be the trigger of innovation of financial markets, and can give a real contribution. Because without speculation, and especially without financial innovation, we could not even have today companies. So even the book is speaking, for example, about the VOC, that was the first form of company and corporation in the 17th century in Amsterdam, and how this process also, for example, contributed to the setup of the first stock exchange in the world. And then after 150 years, the London Stock Exchange. After some other years, we had then the New York Stock Exchange. Without stock exchanges, actually, there could not be progress in society. And this happened always through financial innovation and through the main function that played the speculator at the time. Without speculation, there could not be stock exchanges, for example.
Wonderful. I have a follow-up on that. But yeah, if you can answer it briefly. So, what are the weaknesses of, if I can say, the speculation on financial markets? Is there a possibility that they can be manipulated to trigger certain outcomes that can, benefit a particular group of people engaged in that kind of business for political or for economic reasons?
Yes, essentially, speculation in reality can, especially as I said, if you misprice financial assets, and so the risk maybe is taken in a reasonable way and in a way that should not be taken. And this is very clear, for example, if we think about Islamic finance. Islamic finance is more an ethical form of finance. So in reality, there is a prohibition of garage. There is a prohibition in taking unreasonable risk. In our culture, there is not this prohibition. The only thing that can be done is that there is an objective rule, so it's very objective, that is telling you, if you are a banker, for example, and you use some of your deposits to finance maybe and buy an asset that is quite risky, you should have a percentage of capital that is kept in reserve. So that is the only, more or less, statistical objective quantification of risk that we can have. But then still the banker is a person that essentially can take further risk, or maybe can even transform the asset, that maybe that asset becomes a non-performing loan, can be transformed in a security and can be sold to the market. And this can create further liquidity for the banker and for the bank. In reality, we have a lot of, I call it financial alchemy. So in reality, we can transform an asset into a security. We can sell that security on the market and then obtain liquidity. We can also probably use other techniques like financial arbitrage and regulatory arbitrage. So if those, for example, capital requirements are very high for banks in the US, there are other states where probably these capital requirements are less. In fact, another point that I'm showing in the book and that is very clear today, the time of globalization has finished. So essentially, there is always more a sort of unilateralism of choices and policy making. And so, for example, we've seen in the UK recently, even how the Financial Conduct Authority, that is the equivalent of the Security and Exchange Commission in the US, has been granted with a secondary objective to promote the growth and competition of this country. An objective that actually is very strange for a regulator, but is the new trend of today. So reality today, the role of competition among countries, between countries, is maximized. If we think also about climate change and also the risk mitigation techniques of climate change, and how the US with Biden in this moment with the Inflation Act is promoting in reality investments in the US. If you want to build, for example, factories that they operate within the green economy, you will get a tax credit. So US being a federation can do this because there is a consolidation power in terms of tax. Being a federation, while, for example, Europe as a bloc cannot do this because we have different kind of tax regimes in all the member states. So essentially, policies today are less aligned. Policies, they become more unique, more competitive, and there is more unilateralism. That actually, in some way is very aligned with this book, because this book is explaining how to take risk and to progress. Even if you are a country, you should be able to face uncertainty, but to face uncertainty, you need to be competitive and you need to provide a framework that is unique and creative. So actually, I see this in the policy of Biden, for example, in the Inflation Act. I see this in the new capital reform for financial markets in the UK for listed companies. So this is, let's say, a phenomenon that is in progress, but will always be more evident in the years to come.
Wonderful, wonderful. So lastly, if you can be brief with this one, who is going to greatly benefit if he or she is to put his hands on this book? What's the target audience?
Okay, the target audience, I think for sure are students. So this book is written for students of any kind of subject, even sociology, philosophy, because there are many parts that are also a little bit philosophical. Then also law students, economic students. I already saw that the books has been cited already by economists.
Oh, nice.
So essentially, this is something because, of course, there are especially that chapter on risk and uncertainty. It's quite unique because it's showing you how those theories in financial markets, they developed in time and why. And so it's something that essentially in economics sometimes is missed, while there is a good recap in few pages. So essentially, This book can be useful for students, can be used for academics, but also for regulators, for lawyers, for policymakers, everyone that is interested in working within, of course, financial markets and banking and finance.
That is wonderful. Dr. Daniele, I would like to express my profound thanks to you for making the time to talk about your book. I look forward to talking to you more when you release more other stuff that we can get to talk to here. Viewers and listeners, this was Dr. Daniele. He's currently a lecturer at Queen Mary University of London. Most of his details can be accessed on the link that I'm going to paste right in the description panel on the upload for this video. If you want to get a copy of this book, you can also click the link that is right in the description panel of this video. Dr. Daniele, thank you so much.
Thanks for having me. A pleasure.
Wonderful.